All right. It looks like we're going to start eating them. All right.
All right.
Hello, everybody. How is everybody doing? Good afternoon, YouTube. Hello, Vincenzo. Good to see you. Hello, Tom Jones. As I said last time, we love your music here.
We do. Timeless.
Welcome to the webinar. Happy Lunar New Year to you as well. I hope you guys have some symbols you want to look at. You know, this is one of my favorite events that we do all week because I invite one of my favorite people and we talk markets and just, you know, there's no real thing that's serious except for this legal disclaimer I'm about to read through. So today's demonstration is designed to instruct you on using the MetaStock program and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. And just to add a little bit to that, you know, we're going to be talking about symbols that we may like. We're not going to be making recommendations for stuff that you should buy or would probably buy. We're not going to try and assess that things are going to go up or anything like that. We don't know what your situation is. We don't know what your risk tolerance is. But what we hope to do is maybe point out a few symbols that you might take a look at, but don't buy it. Don't buy based on our advice. We're just like to talk about the markets. So in any case, did I cover that pretty well, Anne-Marie?
Yes, absolutely. Absolutely. Know your risk is always the biggest thing. So taking a look at the, yeah, absolutely.
Let's do it. Yeah, I'm trying to. Okay, let's try it this way. Okay, I'm just going to go in here. Hopefully I'm connected. Otherwise, we might have to tell a joke.
Don't use me for the joke telling. I laugh at all of them, but I'm not good at telling any.
Well, okay. Well, we are really good at dad jokes. We're specialists. Actually. Dad
jokes?
Mm-hmm. Like, so my daughter taught me another one the other day. And let's see if this Dow chart comes up. But why can't a bicycle stand up by itself?
I don't know.
It's too tired.
Oh my gosh, that's funny. That is funny stuff.
Let's talk a little bit. So let's go ahead and start talking. I guess we hit an all-time high in the Dow and some of the other major indices this year. I know we've kind of also put a lot of extra money into the money supply. Do you have any kind of expectations for 2021 just in general?
Well, in general, I think we're going to probably step into a little bit of volatility, but you know, the question is, based on what we see, where might we be able to participate with the least amount of risk? You know, I'm always thinking to myself, okay, I want to be part of this move, but if I get in, where's the place where I go, that's it, I'm done? And if I can see that place very cleanly, I'm in good shape. And so what I'm seeing right now is, although we're hitting these highs, take a look at the congestion over these last 5 candles. We see them as bars here. Yes, they're very sideways. And so what it's telling us is that traders are saying, wait a second, I'll buy the bottom, but I'm too nervous to hold on to see if it breaks out to the top. And the sellers are saying, I'll sell that top edge and have my risk fairly bounded, but I don't want to try and press below support because I think those buyers are going to throw me out of the way. And so really, we've come to a patch where we're just sort of holding steady. And that, in the end, tells me I need to be a little cautious. Sorry about that. Those are planes overhead.
Oh, okay. I thought it was on my side.
No, it's me.
No, no problem.
It didn't used to be a flight path. Let me put it that way. All right. So now it is. Now it's a flight path. Okay. So now as we look at these candlesticks, we really can see, listen, people are buying the support, but they're not pressing higher. And so there's something that they're waiting on. Next week might be a little volatile. We've got a few things coming down. We have a new stimulus package. We have Jerome Powell looking at, I don't want to get all nerdy from that kind of big macro space, but the yield curve between the long-term yield and the short-term yield, he's got to do something about that. And when they start trying to pull the levers on interest rates, unemployment rises. And so he said, hey, I don't want to do that. So we're going to be in a little bit of a place where the stimulus to move forward is in a little bit of a limbo. And so I think traders are going to potentially give back some support, at which point, if we've been selling, like some of the smart folks here that I'm staring at right now, they've been selling when things have been going well into the strength events, that when it pulls back, you're going to have a good shot at going bargain hunting. And that's really my favorite way to say, listen, if you're an investor, you want to wait until things are in a bargain hunting formation. And right now, being very high here, not moving up, not moving down, it's telling us there's going to be a little bit of a wiggle, and that wiggle is usually down before it's up.
Okay, cool.
Yeah.
So we do have another dad's jokes for you.
Oh,
from Lonnie
okay, I'm ready.
YouTube channel. What do you call a cow that's laying down? Ground beef.
Oh, no. Yes.
So
your daughter might like that one.
we are. I forgot. Do you like the changes that are happening at the Fed? I know Biden's putting in. I just drew a blank on her name, but do you feel like they're getting the right people in place, or do you know enough about it to comment about it?
Okay, so Janet Yellen, he's moved.
That's the name I was looking for.
Yeah, he's moved her to the Department of the Treasury, and I believe that the Federal Open Market Committee and the Department of the Treasury shouldn't have that level of intimacy. Let me say that. The Federal Open Market Committee, or the FOMC, which, is where the Fed is, initially, Alexander Hamilton's the guy that put all that together. And he said, hey, listen, let's go out and find people from diverse backgrounds. We want them from all industries. We want them out there to see what the world is like so they can come in and help us really think about the right ways for monetary policy. Right now, we just have a lot of folks who have PhDs in economics and have never done anything like build a business or anything like that. And so the spirit of what the Open Market Committee was supposed to be, I believe, has significantly changed. On top of that, remember, the Fed says, hey, listen, what we do shouldn't affect the market, except they know everything they do affects the market. And so it's just this, it's a space I think is a very slippery slope, particularly with Yellen, who knows everything in the FOMC and has the ability to influence. I don't know, it remains to be seen. If everybody thinks to themselves, listen, what's my best end for the people of the United States of America? I think everything will work fine and dandy. However, I'm not really sure that's what everybody's about. So that being said, I think potentially we might have a little bit of trouble. As of now, everybody seems to be playing nice together, with the key thing of, listen, I don't want unemployment. Real unemployment is really closer to 10.5%, because there are a lot of people who just simply aren't looking anymore. And so Powell continually says, listen, I want us to do something to help fix that, but we need fiscal stimulus for that to happen. And so then that means, hey, listen, I got to turn back to Janet Yellen to see what she can do in that place. So kind of a long answer, but there you have it.
Okay, very good. Let's see, is there any stocks in particular you want to look at? I've got a few.
Yeah, well, we can start with you, and then I can show a few. I've really also been thinking about things from a longer term purpose and thinking about, what industries and things out there are just really fascinating to look at. And of course, I love Roku. So they have just, remember how we were talking about Roku when it was $100 and something bucks. I totally remember that.
Yes, yeah, and I ended up picking some up back then. So
absolutely incredible. They are just screaming ahead. They've added 12 new channels on their devices, and it's just a beautiful platform, especially as streaming services begin to take off the way that they have. The question now is, wow, it sure is running hot. Where do I participate? And so one of my favorite things to do is to say the following. Think about where you would be comfortable buying the stock. Let's say you said, you know what, I want to do something here. I would like to buy some, but I don't want to buy it unless it's come down to $300. Right? If you draw that line, you can see $300 is really a pretty solid support edge, right? The real breakout zone is somewhere around, I don't know, looks like 210. Maybe if you want to slide it down, maybe 220.
Okay, like right here is what you're thinking?
Yeah, right about there. So that's 30. No, yeah, right up at that breakaway space. So we got 250. So that really, to me, if I go, you know what, if I go bargain hunting, that's really the price I'd like to have. Well, it's $466. So don't really see that happening right now. But if I bought it at 300, maybe that wouldn't be so bad, or 305, 310, wherever that pullback was that it moved so nicely to at the end of December. Yeah, right there.
Right.
So
Yeah.
What is that? What is that number?
The low there was 316, yeah.
Right? So I like to sell puts like that. I will sell one put. And so what that one put is, let me see how much a put is for Roku right now. Let's see. Oh, can you look that up for the, or is that something that you don't do very much? Okay,
no, we've got a feature in here that we call option scope.
Absolutely.
So
absolutely.
Let's go ahead and look.
So let's look at something that is priced out in April or May.
Okay, so let me go to the date filters here. I'm going to just look for April, and we'll turn off the February's. And
so next one is July, right?
April, well, we've got April 16th.
June, okay.
And
all right,
June.
So let's look at April and June. Okay, so go ahead.
Let's go ahead and look stuff that, let's see, you were looking at what price?
I was looking at the 315.
Okay, let's see if we can find that real quick. Okay, so here we go. Here's
315 is still not here, so we would have to scroll up just a little bit. Yeah, okay. There we go. All right, so if we go
scrolled up a lot. Right here.
If we go to 315, we can see the bid on that is $5.40. So what that means is, let's say you sold one of them and you had enough margin to manage that. You said, you know what, I would like to acquire Roku, and I would be just doing cartwheels in the street if I could get it at 315. That's how you have to look at selling a put. It's going to pay you $5.40 to do that. So your actual price will be $309.60 less your commission, right? So instead, if you get put to the price, you've now got it at an area that's really very close to the region you would say, hey, you know, I wouldn't mind holding this for the long haul. And what that does is allow you to participate in price action moving wherever it moves, knowing that it's fairly likely that it won't come in, but if it does and you're put to it, that you can go, you know what? I was very comfortable getting this at 300. So it's going to go back to 400 and I'm going to make my 25% and Bob's your uncle. So that is a very nice way to do it. Now, what it does is make people very impatient if the price continues to rise. And so the big takeaway there is if price continues to rise, you can go to June. Let's go back to the option chain, and we can look at the 400 strike on the put side, and it is right down. Ooh, look at the price of that. So the 400 on the puts is $40. So if it comes back to 40, if it comes back to 400, you are going to get this stock at $360 a share. And again, if you're looking at it from an investment perspective and you're ready to hold it because it's got an upshot, that is a lot of beautiful premium sitting right there. So you participate, you make $4,000 in a couple of months. That's about, you know, a little bit less than 8% of the total price. If you could make 8% every couple of months, you know,
yeah, you're
things would
doing
be
okay.
nice. Yeah. And so those are very nice ways to trade very big movers where you are extremely focused on your risk and at the same time allowing time, price decay, and overall trend to sit in your favor. I do this all the time. I do this all the time.
I find it really interesting the way you look at this too, in terms of kind of, it's a little bit of a different take on options. So
yeah, so I tell you, one of my favorites that I'm looking at right now is I am too conservative to trade in Bitcoin. But what I do believe is blockchain has a lot to offer in terms of future motion. So I look for stocks who have exposure to the blockchain space.
okay.
And one of those is a company called Riot, R-I-O-T. And so I found Riot when it was about $4. And so what I did was I said, listen, I'm going to sell the put at $4, but I sold the put out in July, and the volatility, it was already bouncing to about $6 or $8 by then when I decided I was going to buy options instead of just stock. I picked some stock up at $4.16. But then it started moving up, and I thought, all right, I'm going to sell the puts. And I sold the puts out in April, and they were going for $2.60, which means the 4 puts said somebody would force me, remember, to sell a put creates an obligation to buy.
Mm-hmm.
To buy a put creates the right to sell. So I sell the put, creating the obligation to buy. And so I'm always looking at, well, what price am I going to be happy with if you force me to buy it? And so what the chart's done is just run like a mad beast off the rails, but it is the blockchain space. And there are quite a few of them that are doing really fairly well, adapting in these kinds of environments. Do I think it ought to pull back? Yes, it's parabolic. But if it comes in at 25, I'm going to sell the 18 puts. I'm going to sell it out in July. If it comes all the way back down, I'll be in great shape. If it stabilizes and moves sideways, maybe I'll sell the 30s just so long as there's enough premium. But most of the time I don't get put to the stock. Some of the time I do, and I'm usually fairly happy about it because it's lifting. So if you want to take a look at, hey, what is using blockchain but isn't Bitcoin, you're going to see a slurry of companies that are exposed in that space. Another one is Mara, M-A-R-A. It's not moving quite as well, but yes, it is doing really fairly well in grand fashion. And we did the same thing. It started leveling out at 10. We said, you know what? Let's sell the 8 puts. And if we get put to it, we got it at a discount. We're willing to hold it for the long term. And so if we get put to it, we'll sit with it for a while because this is technology that is really going to change the way we do ledger work on a grand scale. I think it is really going to be something fairly exceptional. And if you're looking again, you can see these charts really have gone nowhere in the last 4 days. This one, Mara, is sitting very, very sideways. The next one that sits in the blockchain / cryptocurrency space is a company called Clean Spark. And I think that's CLSK. And Clean Spark is, interestingly, they are an energy group. And what they're trying to do is build microgrids that are strong enough to pay for the electricity that's involved with Bitcoin mining, because it is a very huge energy hog, right? This is the big thing. To work in Bitcoin, you use as much energy as a small city for what Bitcoin has to do across its platforms. And so these guys are trying to build microgrids that they'll be able to put out there that will load on the crypto backend. So they actually bought a miner and they're testing it. The testing isn't going great, but I think that they'll figure it out. And so this is another one that's gone up really, really well. It started at about 10. We started looking at it and we've pulled off a lot of profit from that perspective. Something else I'd like to share with you is a company called Fuel Cell. That's FCEL. Fuel Cell is a very interesting group. And of course, they work with batteries and how batteries are being put together and that sort of thing. We know that fuel cell technology is going to be monumental. And these guys have exposure in hydrogen. They have exposure in lithium. They have exposure in a number of places that have allowed them to sign a couple of contracts with some famous folks. I might think even Tesla is one of them, but I'm not for sure. So
I think I've heard of Tesla.
Yes, just a wee bit, since their since their founder bought $1.5 billion of the cryptocurrency Bitcoin and put it on the books of Tesla. See, a couple of companies have done that too. MicroStrategy. Pull up the MicroStrategy chart, MSTR. This one is fascinating. With this MicroStrategy chart, what they did was they went out and they got an offering. And they said, hey, we need money, and we're going to buy Bitcoin with it. See, literally, that they went out and got preferred and used the money to buy Bitcoin. And since then, they moved from right around the beginning of the year, they announced that they had done it. And look at where they are right now.
Yeah.
This is movement only because of Bitcoin. Only because of Bitcoin. And I'm wondering if Musk is looking at that and thinking to himself, oh, you know, that might be something that I should be doing. I don't know, but that I find to be absolutely crazy. The state of Florida just said that they would take Bitcoin as payment. I don't know who in the world would want to pay with their Bitcoin, but they've done that. And then this week, the oldest, it's not the largest, the oldest financial institution on Wall Street currently, which I believe is Carnegie Mellon, they just stepped into the crypto space this week. They just said, hey, we're entering the crypto space. So a lot of that in the swirl. So for me, I go look at blockchain. I go look at the things that will be needed to fuel the cryptocurrency, but not be directly involved with it. The next fantastic place that I love is drone technology. So let's take a look at UAVs. And just tell me when I need to shut up, because
oh, you're fine.
Okay, so this one is, these guys have a lot of government contracts. And the one thing that's stopping drone technology is how far the frequency can use the drone. Of course, the military has got, you know, ones that cost $1 bazillion and they fly all over the world and do whatever with. With these guys, we're still in RF technology, but what they're doing is sort of chopping around here, and we could get a very nice pullback into the 8 area, at which point it'll be time to buy some. And so that is a really nice one to look. It's spread out. It's not moving so savagely that you go, wow, this has got an air pocket underneath it. It could fall like a stone. They've done a good job filling in all their gaps. They had a gap up in December. They came back and filled it at the 1st of January. They had several gaps up in the last week of January, and they pulled back into the first week of February and filled them all. So the chart is very stable, and I like it a lot. One of their major competitors is a company called, I forget their name, but their ticker is ONDS. Ondas, yeah, no wonder. And these guys also doing the very same thing. What they are doing is breaking the trend by time and not price. And so they are holding support after a big move up. They're holding sideways. They haven't hit higher. They haven't hit lower. Any kinds of dips lower, going to be a buy zone. So anywhere around that $9 marker, I'm going to be looking at this as something very favorable to me, because I do think, you know, they're doing a lot of things. I don't know if you saw that now they have drones that come in and clean the stadiums. They disinfect. I mean, of course, you need people to pick up all the garbage people leave, but to disinfect the seats, to spray down the areas and get them ready for the next game or whatever, they're using these drones. So it's really, I mean, they're using it to clean solar panels, because that's the #1 expense for solar panels, because as soon as they get dust on them, they begin to massively degrade. The big end of my space here that I want to talk to you about is the spaces of lithium, cobalt, nickel, all of those things that form batteries. Think about the things that you and I have on us right now that require batteries, or phones, or laptops, or everything. Yes, everything. And so that technology is huge. Take a look at LAC. This is the biggest, I think it's an ETF, LAC, Lithium Americas. It might be a company. But lithium has been running very hot, and now it's started to stabilize. And so what would be very nice if we had a little bit of a jolt and it came in and hit 15, we'd be in great shape. Taking a look at that area and saying, hey, listen, you know, if it comes into that zone, I'm really happy to buy it. And the big thing, you know, is to be patient. As traders, we want to buy something and have it just go to the moon the very next day because we're a microwave society. But if you wait with dry powder, right? If you take your profits when they look good and you just leave yourself minimally exposed to the things that you like, and then you get a very big dip where everybody's just screaming about all the money that they've lost or whatever, and you are saying to yourself, you know what? I've been waiting for this. I've been waiting for the sale here. I'm going to pick up a little. And if it holds, you pick up a little more. And if it holds, you pick up a little more until it continues to rise. But from the time it broke this 30 area and then began to fade, my thought was, you know what? This chart's going to have a pullback. It's going to test old resistance as support, and I'm going to wait until that time to add. And if you like this lithium space, this energy space that involves battery tech, run a search on lithium and take a look at all the neat little companies out there that are solid, that have been holding well, and just looking for a shot for their day in the sun.
All right, let's take Tom Jones would like to look at BLNK.
VLNK. BLNK.
Charging.
Link
Blink charging.
Again, very nice chart. So what are we looking at? If we look at the very left to the very right, we'll say obviously it's moving up. But let's just look at the last 2 weeks.
Right.
What do we see about these charts? Yes, we see traders saying, you know what, I'll pick up some at support, but I'm not going to buy anymore when it gets to resistance. And if it starts fading, you can see traders saying, you know what, I'm going to take some profit. So how do we know that they're taking profit? They take profit because price moves down. And when the only way price moves down is from people selling. And people sell either because they're underwater or they've said, you know what, I'm taking some profit. And so when we move up off of the support edge near that 45, right where Jeff's cursor was just a minute ago, and we see that wick down near February 1st, you know, people came in and they said, wow, that's a great pullback. I just made another brand new high, so let's see what happens. Well, it couldn't get up over 60. And so now they're watching a fade. So for us as traders, two things can happen. The chart can continue to rally, or it will come back and make a resistance edge that shows a return to the formation that broke it out. Now, does that mean it's going to come all the way back to 10? Probably not. But this one's moving very quickly, and what it's telling us right now in the nearest terms is, you know, I don't want to expose myself to any more risk. So if you're looking at this to add, I would say old resistance, new support looks like at about 32. Is that about right? 32.
I'll move it down to 32, yeah. Right there.
34, something like that. Yeah. So right there, right? That's old resistance, new support. It comes into 35. Listen, the only thing you can control in any market action event is your level of risk. You might think, hey, listen, this is going to be a 3-to-1 reward, but see, you don't control the reward part. The market does that. So you can look at that and go, hey, I'm going to try and pick this up at 37, 38. If it doesn't hold, I'm going to get out, and I'm going to wait for it to come back into the next area of support, and maybe that support area is 20, right? It depends. If you say to yourself, you know, I don't want to do that, I think it's good for the long term, then if it starts losing its edge at that 37 area, trim down to 5 shares so that if the wheels come off the bus and it does come back to 10, you're not out thousands and thousands of dollars, right? You go where the getting is good, and that's going to be, can I hold support and do I move higher? And right now I'm holding support in the broad price action, but I'm not moving higher, and that is always a danger zone.
All right. Bill says that SIRC is doing very well. So let me pull that up. And looking, I guess it's solar
integrated roofing.
I like the name of that.
I wonder if they do solar integration for roofing.
Yeah, maybe they. Yeah, probably.
I love those. I love those names where people go, "Oh, I know exactly what you do." It's not. Ooh, this is a very interesting little gem.
Yeah, he said exactly. It's pulling back nicely and looking to run. So
yes. So the question is, where are people going to stop buying? They're going to stop buying at a place that they consider a value event. And so the value event might be, you know what? Let's see if it fills this pesky gap at around $1.40 that it hasn't before, right? So it hasn't come back to fill that gap somewhere around, I think it's $1.40, something like that. And then there's, it's $1.50.
Yeah,
it's $1.50 from the close of that one. Yes. So there we have it. It gapped up into 160, 170. And so that is a support zone. If you say to yourself, hey, I think it's going to run from here. The question is, what makes you think it's going to hold? Has it made a higher low? Yes and no. It made a higher low yesterday, not a higher low today. That's the lowest low from Wednesday, so it is lifting from that edge. So that answer is yes. The second question is, has it broken resistance? And to me, that number looks like about maybe 205, 210, right? It's where all that congestion is from, say, Monday's chart, $2.05. Yeah, just a little above that area. Yeah, right there.
Right there. Okay.
Right, so that was Tuesday. We had a gap down on Wednesday, sort of held on Thursday, opposing tails. Now all of a sudden, I close underneath the low of that candlestick I had yesterday. To me, this chart says it's got more pullback on the horizon. So it's got a pullback either to 150 or all the way to 70. Right? Again, this is a very inexpensive stock. So if you say to yourself, I'm waiting for it, but I really want to get involved just so that I can have my eyeballs on it, you buy, a couple hundred shares. Nothing that if something happens and it falls through the floorboards, that you're going to be out of anything. You're going to be in really good shape with just a very small loss, and you'll be able to add on that pullback space. I like the fact that the volume down is diminishing, and all the volume down here has done a nice job collapsing off of these higher edges. So there are more people looking to buy. I just think it either needs to fill the gap down at 150 or clear to 10 before it moves into a good space.
He says there's a historical support monthly at 140 to 150. So we're going to go to the monthly. We can take a look at that real quick. So right here, maybe?
Yeah, there's definitely congestion there. I don't know. I would call it, I would say it's pretty heavy congestion right there. But hey, listen, you know what the great thing about these guys are? Just beautiful high flyers. They come in, they really get their stride because somebody finally pays attention to them, and they just run up from where they go. But you can see from that monthly chart how volatile the stock actually is. It moved up, it moved down, it was all over the place. All over the place. And, look at how high it went and then just fell like a stone. So something happened to them intrinsically. Yeah, something inside, right? They either had some leadership problems, some folks making bad decisions, some supply chain issues, whatever it is, and now they're trying to recover, which is always great. Everybody loves to see a phoenix rise.
Let's talk about a different one. I'm kind of curious I haven't looked at this chart in a little bit, but let's say that we have let's take a look at oil. This
Yeah,
is USO, the ETF. Let's say
right,
that we think things are going to get, maybe the economy is going to get more open. This
right.
might be a way to, wow, look at this
Oh
chart.
yeah, it's
I
see.
haven't looked at it.
Here's what happens when the new administration came in.
Mhm.
At the very same time, they said, "Hey, listen, we're going to look at alternative energies," and then the Saudis came out, OPEC Plus, and they said, "Listen, we've got 99% compliance, and we are going to stop pulling oil out of the ground." And so this is actually happening because of curbs. They're still saying the first half of the year is going to be very messy, but for years they had this big unwind of price action falling off of a cliff. And now we're seeing, hey, listen, we're going to be not able to pull things out of the ground because there are going to be sanctions against that sort of thing. And we may not be the predominant oil supplier anymore with all of these things that say, hey, you can't do it. Because number one, right now, we are the number one world supplier of oil. We produce more oil than anybody. And so being the number one producer and then having pipelines getting shut down and that sort of thing, it's making supply constraints make the price go up. And then Goldman Sachs came out when it was about, I don't know, maybe 43, and they said, hey, listen, we're looking at 57 as a target. And so it's run straight up ever since.
Okay. Interesting. One last one, I think. We're not getting
Sure.
a lot of them. If you guys have stuff you want to look at, I'm going to go with one of Greg's favorites, RCL.
Ha! I was wondering about that. I haven't looked at it in a while.
Me neither.
Right? This thing's a beast. And of course, imagine the cash burn these guys have. Mm-hmm. Imagine the cash burn. And yet...
You might say they're having a difficulty staying afloat?
Oh my gosh, another dad joke. Oh, wow. Okay, they do. The great thing is, take a look at the stabilizing behavior of this chart. If it cannot hold 65, it's going to fill the gap. And that's down at what is that, 60?
It's 59.80.
Okay, so that's what's going to happen. If it doesn't hold this support line, it's going to fade. So what they've been doing, very interestingly, is I love big ships. I love being on the water. It's a lot of fun for me. So I'm always looking at what's changing in this environment. And so what these folks have said in the fine print is, hey, you can book a cruise with us, but if you come down with COVID and you can't get on the ship, we're not giving you your money back. I don't care how much time you have in front of it. So what they've started saying is, you only get this percentage back, or this percentage back, or this percent. So they're being a little bit more forward thinking about how to keep their coffers at level places. And so that's going to be very interesting. They've pushed off their start dates 2 or 3 times. And so, maybe they'll start opening soon, but I think it's a fairly rocky road for them. Just so long as they hold the 50 area, though, it's in really good shape. And so it's taken months, literally, for them to drop through that edge. So again, if you're thinking to yourself, old resistance, new support, you go sell the put. You sell the 50 put. If you go, I don't want to buy this at 65, but I wouldn't mind buying it at 50. So let me see if I take a put. If I sell the put out in July, what are they going to give me? Maybe it's $3 or $4. Maybe it's $5. It's going to be something where you go, wow, I got it even cheaper than that. I love using that, yeah, let's use June. Perfect. So if we use June and we look at
you said the 55, yeah. Right?
50.
Or the 50.
The 50 puts 50, are going right? For 310, right? That means you get it at $46.90. I mean, wow, that's great. And if it doesn't come in to your 50, you still made $300 on stock you didn't even own. So I love using the short puts, especially in places that are very bullish. And we have markets that are fairly bullish. What you don't want to do is think to yourself, hey, well, it's going to hold 65, so I'm going to sell it for 880. And then you go, well, that means that I get it at, 53 or something. But then what if it goes to 43, right? It's just, you just want to be careful about how you use that and think to yourself from a value perspective, looking at this chart, how do I want to acquire this? And that's how I love using the short puts. And you can do that in your IRA. That's the only kind of option that you can sell short in an IRA.
I did not know that.
Yes.
That's interesting.
Yeah, cool. Of course, you can't sell stock short, but you can sell puts.
I have nothing to add.
I know I've talked your ear off. There's been so much to go over since we last talked, and I wanted to make sure that I had a lot of interesting places to go after. And Did you see BlackBerry was trying to make a comeback, getting some new ones out? It's fairly interesting too, BlackBerry. So looking at Tesla.
Okay, sure.
Yeah, let's look at Tesla.
Okay.
Tesla is one of those stocks that, remember how Apple used to have a fan base that was just manic? You could never say anything bad about Apple. And Apple is still an amazing company, but do you remember when before Apple got to the S&P 500, these gigantic rockets up it would make, and it split? How many? I don't even know how many times Apple split. But
I don't know.
It split quite a few times. And yet, once it got to the S&P 500, it started behaving differently. Tesla got to the S&P 500, and it moved up $400. And so it is a stock that still defies a little bit of the norm in terms of what folks do or don't do in this kind of environment. And this is one of those other places that if you love this stock and you think it is going somewhere, then you know what? You sell the put if you think you're going to, and the volatility is very high in here. So these puts are expensive, and so you make a lot of premium, right? If you say, hey, it'll come back to 600, and it's at 8 something right now, then that $200 might give you $15, $20 for an option. So, and really that is the last area of heavy congestion. Before that, it's the 450 region, and that really is what happened. They split, and then they joined the S&P 500, and as soon as they got to the S&P 500, they took off again, just defying every description.
Gravity.
Yeah, definitely defying gravity. Definitely.
All right, let's look at one more. Or let's see. Bill says Tesla is looking like either a symmetrical broadening of the 780 breaks. If it bounces from here, possibly a diamond top to me.
Possibly. Here's what we know. Any savage pullbacks, people are going to be buying it, because the people that I know that are long Tesla, I mean, they're going to want to be buried in a Tesla. They just love it. absolute love and reverence for everything. And then the people who hate Tesla absolutely hate it. So, you know, definitely interesting. Oh, Bank of America. I haven't looked at that in a while.
Kelly wants to, and since he's my boss, we're going to look at Bank of America.
There we go. Now, you know, this is great to look at, right? Because we could see the COVID break over there in February, the big gap down from, last February.
Oh, right here.
Yeah,
Okay.
right there. Yeah. And so we have the gap that opens up at the top where it fades. Yeah, whatever date that is. Draw a horizon across that for us, please.
You want it right here?
Yeah. Yeah.
Okay.
And then draw. Yes. Beautiful. Now you see the real battle zone here. This is what's happening here. The question is, how is Bank of America going to recover? My thought is that it's, unless rates rise, it's very hard for banks to make money. On top of that, we are moving back into the era of grand oversight. So the CFPB has just hired 25 new people. There's just a huge new risk oversight event that's going to begin again because of the shift in the administration. And so if rates stay low and oversight stays high, banks are not going to do well. And so this is my suspicion, is that this is the beginning of a double topping event. Notice the volume on the last run up, right? So here's the last run up. I mean, the very last one from the beginning of February.
From the beginning of this one right here, right?
Yeah, no, that is actually January.
This one, okay.
Yeah,
This one.
so this
What you're trying to
bounce
point
off
out
of
is this.
29, yes. I'm trying to point to that. Yes, the overall, but particularly the last patch, right?
Okay, right
that view right there off of that 29, it's rising but under diminished volume. And so to me, that means they're going to try and test 30 again. And that's going to be that line in the sand for them. You know, can they hold that region around 30? Look at how long it's taken them to get here, right? It's taken a long time. And then all of a sudden, it starts rolling over right into January, and it cannot bounce back. It filled the gap, really faded dramatically, and then, you know, now it's at a lower high. Is this bank survivable? Of course, it's a behemoth. The question is how you want to acquire it. Now, the options and implied volatility in these chains are very small, so you don't get a lot of premium like we're talking about in the other space. And so from there, you would say, you know, I don't know, maybe I buy the 27 calls way out in the future, right? Or maybe I buy the 30 calls way out in the future, right? So those leaps give the chart a chance to recover and then bounce. That's my thought for that one. I believe the undercurrent and the underpinning, even though they're going to be making money off the PPP loans, if we can't have rates rising and we have oversight building, banks are going to get scrutinized more. And that logically to me seems like, you know what, we might have to pump the brakes on these guys.
All right. And then do you have any fun plans for this weekend?
You know, I want to sleep. I know I look like very haggard. No sleep.
You look great.
Well, you're kind. But yeah, sleep. I love sleep. If I can sleep, Yeah, so no, I know I'm terribly boring. Have had plans in the past, but right now I'm
It's
just,
COVID. What are you gonna
yeah,
do?
yeah,
Right?
exactly. Watch
I'm gonna
movies
walk
and
the dog
sleep.
a few times. That's about it.
Yeah.
All right. Well, I appreciate it. It's always great to have you. Thank you for
Thank you
coming
so
in.
much. Thank you for having me. It's always
Oh,
fun.
how do we? I forgot. Almost forgot. So if you
Oh,
wanna follow Anne Marie,
oh yeah,
you would go to the tradingbook.com. Did I remember that right?
correct.
The
Yes, yes.
tradingbook.com. Okay. And Greg
All
was
right.
already gotten that out there. So thank you, Anne Marie. Have a great weekend.
My pleasure. You too. Thanks, everybody. Take care.
All right. Thank you. And thanks for coming, everybody. We hope you enjoyed it.